Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of Investing in Mortgage-Backed Securities, a complete guide. Interest rate risk. Interest rates play a big role in the value of MBS. When interest rates rise, the value of MBS tends to fall. Why? Because investors can get better returns from new investments that offer higher interest rates. It's like having a $5 coupon for a store that suddenly ups its prices. The coupon doesn't buy as much anymore. Similarly, when interest rates go up, the returns on existing MBS become less attractive. If you're holding MBS when rates rise, you might see their value drop. Prepayment risk. Prepayment risk happens when borrowers pay off their mortgages early. This might sound like a good thing, but for investors, it's a potential pitfall. Imagine you're expecting steady monthly checks from an investment, and then, all of a sudden, they stop because the borrowers have paid off their loans. When borrowers prepay, investors get their principal back sooner than expected and might not earn as much interest. Early prepayments usually happen when interest rates fall, prompting borrowers to refinance at lower rates. This can reduce the yield of the MBS, leaving investors in a bind. Understanding these risks can help investors make smarter choices. By keeping an eye on credit ratings, researching interest rate trends, and being mindful of prepayment patterns, investors can better navigate the waters of mortgage-backed securities. How to invest in mortgage-backed securities. Investing in mortgage-backed securities, MBS, can be a smart move if you're looking to diversify your portfolio. There are different ways to jump into this type of investment, whether you want to go it alone or prefer a more hands-off approach. Let's explore these options. Direct investment in MBS. If you want to have more control over your investments, you can purchase MBS directly through a broker. This route is similar to buying stocks or other bonds. Here's how you can do it. Open a brokerage account. The first step is to set up an account with a reliable broker. You'll need to provide personal information, financial details, and complete some forms. Research MBS options. There are various types of MBS, such as those backed by Fannie Mae, Freddie Mac, or Ginnie Mae. Take your time to look into each option to see which fits best with your investment goals. Place your order. Once you've decided which MBS to buy, place an order through your broker. You can choose between different order types, like market or limit orders, based on your strategy. Monitor your investment. Keep an eye on your MBS investments just like you would any other asset. Pay attention to interest rates and housing market trends, as these can affect your returns. Investing through MBS funds. For those who want a bit less hands-on management, investing in MBS through mutual funds or ETFs, exchange-traded funds, can be a great alternative. These funds pool money from many investors to buy a diversified portfolio of MBS. Here's how you can get started. Pick a fund. Start by researching different mutual funds or ETFs that focus on MBS. Look into their past performance, fees, and the expertise of the fund managers. Open an investment account. Similar to direct investment, you need an account with a broker or investment platform. Some online platforms make it easy to browse and select funds. Invest in the fund. After selecting a fund, you can invest by purchasing shares. The minimum investment amount can vary, so check the fund's requirements. Let the professionals handle it. One of the biggest advantages of MBS funds is that professional fund managers make the investment decisions for you. They analyze market conditions and adjust the portfolio to maximize returns. By understanding these two main pathways, you can decide which method of investing in mortgage-backed securities aligns best with your financial goals and risk tolerance. Whether you prefer direct control or a managed fund, MBS can offer a unique way to diversify and potentially profit from the housing market. Current market trends in mortgage-backed securities. Mortgage-backed securities, MBS, are a significant part of the financial market, often reflecting broader economic trends. Staying updated on current trends can help investors make informed decisions. Two major factors shaping the MBS market are economic conditions and regulatory changes. Impact of economic factors. Economic conditions have a direct impact on MBS. Let's break down how some of these factors influence the market. Inflation. When inflation rates rise, the value of the fixed payments from MBS can drop. This is because the purchasing power of future payments decreases. Investors may demand higher yields to compensate for this risk, impacting the prices of existing MBS. Employment rates. High employment rates often lead to increased consumer spending and borrowing. This can boost demand for home loans, leading to more MBS issuance. Conversely, high unemployment may result in higher default rates on mortgages, which can negatively affect the value of MBS. Interest rates. The Federal Reserve's policies on interest rates significantly affect MBS. When interest rates rise, new mortgage rates also increase, making existing MBS with lower rates more attractive. However, rising rates can also lead to decreased demand for new mortgages, reducing the supply of new MBS. Think of the economy as the weather and MBS as the crops. Just as crops depend on weather conditions to thrive, the MBS market relies heavily on economic stability. Investors need to keep a close eye on these economic indicators to gauge the market's direction. Regulatory changes. Regulations play a crucial role in shaping the MBS market. Recent changes have focused on ensuring market stability and protecting investors. Here are some key regulatory trends. Stricter lending standards. Following the 2008 financial crisis, there have been more stringent lending criteria. Banks and financial institutions must now adhere to higher standards, reducing the risk of high default rates. This makes existing MBS more stable but can limit the creation of new MBS. Risk retention rules. Regulations now require issuers of MBS to retain a portion of the credit risk. This means they have to keep a stake in the securities they issue, aligning their interests with those of investors. This has made the MBS market more secure and attractive to cautious investors. Transparency and reporting requirements. There has been an emphasis on greater transparency in the MBS market. Issuers are required to provide detailed and timely information about the underlying assets and their performance. This level of transparency helps investors make more informed decisions and reduces the likelihood of fraudulent activity. Imagine the MBS market as a well-regulated game of chess. The rules and regulations are the guidelines that ensure all players adhere to fair play, making the game predictable and reducing unforeseen hazards. Understanding these trends can help investors navigate the complex landscape of MBS, helping them make smarter, more informed decisions. Mortgage-backed securities, MBS, offer a unique opportunity for investors. They combine elements of real estate and bonds, giving a mix of stability and growth potential. Understanding the risks and rewards is crucial. MBS can provide steady income, but they also come with complexities. It's essential to assess these before diving in. Looking ahead, MBS remain a strong option for those seeking diversified portfolios. Stay informed and consider adding MBS to your investment strategy. Keep your goals in mind and make decisions that align with your financial vision. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.